Good morning, everyone. Please come to this very important topic, advanced capital budgeting. This topic is an extension of intermediate topic which you have studied, that is capital budgeting. I hope you remember. So we are not going to again discuss those basic calculation of NPV, IRR, profitability index, discounted payback period. Okay, we assume that you know basic calculation of NPV, IRR, profitability index, discounted payback period, modified IRR, equivalent annualized cost or equivalent annualized benefit approach. I hope you have studied that. Yes or no? Say yes. Have you studied all those basic calculations? Very good. So here we go with the advanced capital budgeting decisions. Advanced capital budgeting decision, first we'll just discuss some basic thing again before we start with the numerical question. Capital budgeting problem, we have assumed in the intermediate level that there is no risk involved. We have proposed projected cash flows, we have projected discount rate, and we have assumed that investment proposal do not involve much risk. Is it right? Remember what you have done. You have assumed cash flow for next 10 years. In intermediate 10 years, some problem 15 years, and you have assumed that this cash flow will be actually realized. Oh my God, that is not true. That is not true. Therefore, in this chapter we are going to introduce risk, uncertainty, inflation, and how they can affect the project. These assumptions made in intermediate level were for simplification purpose, were to simplify your calculation, simplify basic understanding. But now we have to take into consideration real life situation. In real life situation, whatever assumptions we make, they will change, because either there can be inflation, there can be change in technology, there can be change in government policy, there can be change in competition, there can be substitute product available, taste, fashion, custom can change, and that may affect all your projections. First, today we are going to discuss the role of inflation in capital budgeting. Inflation affects capital budgeting because all your future cash flows which you project today can get affected. Let us revise intermediate what you have done. You have computed CFAT, and the same CFAT you have used for decision making. But dear student, you have made a grave mistake. What is that? You have not taken into consideration the fact that in future there would be inflation. So sales revenue which you are projecting as 100 rupees for 5 years is actually not correct. There may be inflation. You may charge 10% more every year. So these figures which you have projected may not be correct. More important, cost. Cost comprise of material, labor, overhead. Cost comprise of material, labor and overhead. Now you see, you have taken some fixed material cost that you assume it will be 50. But do you think material cost will be 50? There is so much of inflation. There is so much of inflation that what projection you are making is not true. Then what do? I have to incorporate inflation in decision making. I have to incorporate inflation in decision making Otherwise, the project which seemed viable at the beginning will not be viable at the when we start the project, and you might end up making losses. Therefore, it is very important to incorporate the effect of inflation in capital budgeting. Inflation erodes the purchasing power of money over a period of time. That is what they teach in economics classes. Inflation means reduction in purchasing power. You cannot buy the same basket of goods and service which you have bought earlier. The finance manager has to keep in mind the impact of inflation. He has to reorient various financial policies according to the fast changing circumstances. So inflation would affect my decisions on dividend payout, capital restructuring, depreciation policy, profit planning, working capital, tax planning. These are just few examples where inflation can impact financial decision making. The question on inflation are usually very easy. So far that is the trend in the exam. Before we go to the question answer session, I would first tell you some basic concepts relating to inflation. Once you are familiar with this basic concept relating to inflation, the term that they use in the question, it will be very easy for you to solve questions on inflation. Is it right? Are you ready? If you are ready, then inform me, then I will go ahead. First concept we will learn, important term number 1, nominal or monetary or out of pocket cash flow. Nominal or monetary or out of pocket cash flow means these are cash flows including inflation. These are cash flows which are including inflation. What does that mean? Let us say you go to buy a pizza today after the class. Go to buy a pizza, or those who are in South India, let us say you go to buy dosa. Okay, you pay a price for that. How much you pay? You pay 250 rupees for example. What is this 250 rupees? Is it nominal cash flow or is it real cash flow? Nominal cash flow means based on today's purchasing power. Is it nominal or real? Please reply. Is it nominal or nominal cash flow? Yes. Amount paid today is always nominal cash flow. Is it right? Suppose you go and buy iPhone today. You want to purchase iPhone 15 Pro today. Can anybody tell me how much they are going to charge? How much is that iPhone 15 Pro? Let us say 1,50,000. This amount that you will be paying today is the nominal cash flow, also called monetary cash flow, also called out of pocket cash flow. So in the exam, if these three terms are given, either of the three terms, please understand they have given you nominal cash flow. It is including inflation. It takes into account the inflation of the current year up to the date. That is monetary cash flow. It is based on current purchasing power. In economics, they use a term called current purchasing power. Second concept is real cash flow. Real cash flow means cash flows excluding inflation. If inflation would not have been there, now this is a hypothetical calculation. If there was no inflation, how much would be the cash flow? If there was no inflation, it is based on current constant purchasing power. Based on constant purchasing power. So same example, a pizza cost you 250 rupees. In the current year, inflation is 10%. Quickly reply, if there was no inflation, Had there been no inflation, then what would be the amount you would have paid for this pizza? Please reply. Take your calculator, keep ready. Amount paid without inflation, if no inflation was there. If no inflation was there, 250 divided by 1.10. Yes, what is the answer? Today I don't have calculator. Please reply. What is the answer for this? Just check. 227.27. 227.27. This would have been the amount you would have paid if there was no inflation. So how did I convert nominal cash flow into real cash flow? So here the word real means excluding inflation. Real cash flow will be equal to nominal cash flow divided by inflation was 10%. So inflation rate. First to understand the concept, and if the gap is 1 year, to the power 1. If the gap was 2 year, then the power will be 2. So this is a formula which is very simple. I gave you some example just now to demonstrate how to convert nominal cash flow into its equivalent real cash flow. Third is nominal or money discount rate. Nominal or money discount rate means the discount rate includes the future inflation also. Discount rate is including inflation. Discount rate is inclusive of inflation. So don't add inflation again. If the problem says nominal or money discount rate is 10%, it means they have considered future inflation in that required rate of return. Real discount rate, RDR, it means discount rate excludes future inflation. Discount rate excludes future inflation. So once again I repeat 4 things. Nominal cash flow includes inflation. Real cash flow does not include inflation. Real cash flow is at constant purchasing power. Nominal discount rate includes inflation. That means your required rate of return includes inflation premium. Real discount rate excludes inflation. Real discount rate does not include the inflation premium. Then the next issue will arise, how to convert real cash flow into nominal cash flow, nominal cash flow into real cash flow, real discount rate into nominal discount rate, or nominal discount rate into real discount rate. So 4 conversions we are going to learn. Very simple. First we are going to learn how to convert real cash flow into nominal cash flow. This is important because in most of the question we have to apply this. Very important. Nominal cash flow is equal to real cash flow into 1 plus inflation rate to the power n. So I am going to ask you a question. Suppose today the price of t-shirt is 2500 rupees. The price of that t-shirt which you are wearing is 2500 rupees. Inflation is 10%. Every year the price of the t-shirt is increasing by 10%. My question is, after 2 years, what will be the price of the t-shirt? Price of the t-shirt after 2 years. Those who are learning online, you should reply. Take your calculator. If this basic question is asked, price of a t-shirt today is 2500, inflation is 10% per annum. 10% per annum. How much this t-shirt would cost you after 2 years? Please reply. If you don't reply, then how do I proceed further? This is for you not for me. I have already passed, and with your blessing I got rank also in final. This is the time for you to get the rank. 3025 is the right answer. 3025, one Mr. Bapat has given 3025. So this is inflation. How did you reach this number? You have taken 2500 into 1 plus 0.10 to the power 2. That is a common sense. 10%, 10% every year. Effect of inflation is cumulative. Effect of inflation is cumulative. Cumulative means understand step by step. After 1 year, this same t-shirt will cost you 2500 plus 10%, which is 2750. But next year, it will become 2750 plus 10%, which is 3025. So the effect of inflation is cumulative. The effect of inflation is cumulative. Hence, we have to apply this formula to find nominal cash flow from real cash flow. So first formula of the day, you can note it down. You can make a small formula book for yourself. You have formula book? Yes or no? Yes. You will write nominal cash flow equal to real cash flow into 1 plus inflation rate to the power n, and the logic is simple, presented below. Nothing to remember. Effect of inflation is cumulative. Reverse working also they can ask you. They can ask you that suppose after 2 years, reverse working, suppose after 2 years the price of t-shirt will be 3025, inflation is 10%. If there was no inflation, had there been no inflation, what would be the price? So if there is no inflation, the reverse working I have to do nominal cash flow divided by 1 plus inflation rate to the power n, and you see this will be equal to 3025 divided by 1.10 to the power 2. You can remove the inflation. You have removed the inflation, and the answer is 2500. Both formulas are just same formula presented in a different way. So that is about relationship between real cash flow and nominal cash flow. So I will revise quickly. Nominal cash flow equal to real cash flow into 1 plus inflation rate to the power n, and real cash flow equal to nominal cash flow upon 1 plus inflation rate to the power n. Now the next concept is how to convert real discount rate into nominal discount rate, or nominal discount rate into real discount rate. Keep the book in front of you, nothing to write, it's given in the notes. The formula is 1 plus nominal discount rate is equal to 1 plus real discount rate into 1 plus inflation rate. Let us say, for example, real discount rate is 10%. That is, my discount rate does not include inflation premium. Discount rate does not include inflation premium. It involves basic time value of money, but it does not include inflation premium. And suppose inflation rate is 10%. Suppose inflation rate is 10%. My question is, what will be your nominal discount rate? What will be your nominal discount rate? Generally the student will answer like this. Generally the student will say, sir, so is it 10 plus 10, 20? The answer is not 20. The answer is not 20. The answer will be nominal discount rate equal to 1 plus real discount rate into 1 plus inflation rate minus 1, and then after that you multiply by 100 to get the percentage. Who will give the answer? Who will give me the answer? Please reply. What will be the nominal discount rate in this example I have written? Anybody answer? Divya, answer please. Anup. Anybody answer? 21%. Okay, 21% is the right answer. Then some student will have a query why we have multiplied the two, why we have not simply added the two figures. So for that, let us understand one small story. Okay, suppose you go to buy a cricket bat. For the sake of simplicity, assume that cricket bat costs 100 rupees today. Assume cricket bat costs 100 rupees today just for simplicity. Otherwise, it will cost you something like 5,000, 10,000. If you buy a high quality English willow, 40,000 also. So cricket bat 100 rupees. There was an improvement in the quality. Improvement in quality of the cricket bat. There was an improvement in quality of the cricket bat. Because of that, the price of cricket bat increased by 10%. So it became 110. This 10% is not due to inflation. This 10% is due to improvement in quality. Maybe they have added some more feature in that cricket bat. They have used better quality glue, better quality wood, better quality that handle. So because of that, the price of that cricket bat increased by 10% because of improvement in quality. And there was inflation of 10%. There was inflation of 10% during this period. So after 1 year, please reply, what will be the amount you will pay for the cricket bat? What is the amount you will pay for this cricket bat? Will you pay 120 or 121? 110 plus 10% you will take, 121. Now if I compare these two, 100 was at the beginning, 121 at the end. It is not 20 increase, it is 21. 10 rupees is the increase because of improvement in quality. The inflation 10% is applicable on 100 also, and 10 rupee improvement in quality. So that effect of inflation is on 100 and 10, 110 rupees. Okay, same logic is applied here also. That the effect of inflation will be on real discount rate also, just like the effect of inflation is. So this is like real discount rate 10%, and this is inflation. So the effect of inflation goes to the real factor also, and therefore in future we are going to take 1.10 into 1.10 minus 1. Once you have understood this formula, now you can find any missing figure. For example, reverse working question, real discount rate equal to, this is real discount rate I want from this formula or from this formula. So I will take 1 plus nominal discount rate, this figure. I will divide by 1 plus inflation rate minus 1. So that gives me real discount rate. Depending upon the question, you may have to shift from nominal to real or real to nominal. Below that I have written 4 important points. 4 important points, please pay attention. Okay. One is, all cash flows must be consistently written either in money term or in real term. That means all cash flows should be either real, all cash flow from 0 till last year, nth year, it should be either written in nominal term or it should be written in real terms. Second, nominal cash flow will be discounted using nominal discount rate to arrive at present value. Nominal cash flow, use nominal discount rate. Real cash flow will be discounted using real discount rate. Real cash flow, real discount rate. Real cash flow can be discounted using real discount rate. Nominal cash flow should be discounted at inflation rate to arrive at real cash flow. If suppose you have to use real discount rate, question gives you real discount rate but nominal cash flow, first you convert nominal cash flow into real cash flow and then apply real discount rate. So how do I convert nominal cash flow into real cash flow? Again one more time, real cash flow equal to nominal cash flow upon 1 plus inflation rate to the power n. And in case very important, this point number 6, if real cash flow is given and nominal discount rate is given, then you will have to first convert real cash flow into nominal cash flow. How do I do it? Nominal cash flow equal to, one more time, is equal to real cash flow into 1 plus inflation rate to the power n. Is it right? Now I have given you one space for drawing diagram in your notes. So please write down in your notes, there is a box there, space for diagram. Space for diagram, write down in the center of the page, nominal cash flow, real cash flow and present value. In the center of the page, write down. Please everybody focus, concentrate. One of the most important topics you are dealing with in your syllabus now. Nominal cash flow will be discounted using nominal discount rate. Nominal cash flow will be discounted using nominal discount rate to arrive at present value. So draw one arrow, connect nominal cash flow to present value. But suppose real cash flow and real discount rate has to be used. Convert nominal cash flow into real cash flow first by eliminating effect of inflation. By eliminating effect of inflation and then use real discount rate. Then use real discount rate. Is it right? So if you have to use real cash flow and real discount rate, but the question gives you nominal cash flow, first you will have to convert nominal cash flow into real cash flow by using the formula nominal cash flow upon, nominal cash flow upon 1 plus inflation rate to the power n, and then you can use real discount rate. One more thing, if real cash flow is given and nominal discount rate is given, now what you will do, you will convert real cash flow into nominal cash flow. You will go from here to here and then you will use nominal discount rate. So you will add effect of inflation in real cash flow and use nominal discount rate. Is it right? Did you like this diagram? Those who like this diagram will say yes. Okay, this will help you to understand what you are supposed to do. Summary is, nominal cash flow will be discounted using nominal discount rate. Real cash flow will be discounted using real discount rate. Now next question is, you are solving questions of capital budgeting. Capital budgeting questions are incomplete without depreciation adjustment, because you are going to invest in capital asset. On capital asset you get depreciation. Question number 1, is depreciation, please reply fast, is depreciation a cash flow? Is depreciation a cash flow item? Is depreciation a cash flow item? Depreciation is not a cash flow item. Depreciation is a non-cash flow item. Non-cash flow. Then why we are discussing depreciation when it is a non-cash flow item? Depreciation is allowed as expense under income tax law, and because depreciation is allowed as expense under income tax law, we have tax saving or tax shield, which is equal to depreciation multiplied by tax rate, which is equal to depreciation multiplied by tax rate. So depreciation in itself is not a cash flow, but tax saving is a cash flow. This is equal to cash inflow, and the amount is huge. If the asset is of 100 crore, if depreciation rate is 25%, on 25 crore at 30%, you save 7.50 tax, very big amount, and not 1 year, till the life of the project. So therefore depreciation is important in capital budgeting. Now my question is whether depreciation is subject to inflation. Yes, whether depreciation is subject to inflation. Can you please reply? Depreciation is not subject to inflation. Why depreciation is not subject to inflation? Because depreciation is calculated as per tax laws like Income Tax Act. Does Income Tax Act allows you to increase the block of asset value because of inflation? Please reply little fast. Does income tax law says, okay, this year inflation is high, so we'll allow you more depreciation? No. Income Tax Act says you will get depreciation on cost, historical cost, the cost that you incurred. Hence, what is the moral of the discussion? Depreciation is not subject to inflation. Depreciation is not subject to inflation. Depreciation may be a non-cash expense, but it is a tax deductible expense, so it is relevant in capital budgeting, but depreciation is allowed on historical cost only. Hence depreciation will not be subject to inflation. What about taxation? What about taxation? Tax is always calculated on nominal basis. Tax is always calculated on nominal basis. Why? Because government will say we will want to tax you based on your current income. Your current income is based on current year sale, current year expense. So in those questions, very important, if you have to calculate tax, sales will be first taken as nominal, expenses will have to be taken as nominal, you have no choice. Sales nominal minus expense nominal will give you PBT nominal, and then you can take tax on PBT, you will get nominal PAT. After that you have two choices. After that you can convert into real PAT and use real discount rate, or nominal PAT, you can directly use nominal discount rate to arrive at present value. Is it right? So this is how we will work. in those questions where we have to compute taxes, all income, all expenses will be first brought on the basis of nominal cash flow, because tax is calculated on nominal cash flow. That time you don't have a choice. Once you compute the nominal PAT, then you have a choice. You can either apply real to real or nominal to nominal concept. One more concept is type of inflation given in the question: symmetrical and non-symmetrical inflation. Then the student will be wondering what is symmetrical and what is non-symmetrical. So in the question it is given sales, material, labor, overhead, and they have given inflation rate also. Inflation rate. In some question they will say all cash flows are subject to same rate of inflation. What will you call it? Symmetrical or non-symmetrical? If all cash flows are subject to same rate of inflation, what will you call it? What will you call it? Symmetrical. This is called symmetrical inflation problem. This is easy because all cash flows are subject to same rate of inflation. Sometime the problem can test you. Sale subject to 5% inflation, material 6%, labor 7%, overhead 4%. This type of problem is called non-symmetrical inflation problem. Non-symmetrical inflation problem. So you have to be very careful in the second type of problem. When all revenues and costs are subject to same rate of inflation, this example we will call it symmetrical. Life is easy in that case, but exam is not easy. Non-symmetrical inflation, second example, when items of revenues and costs are subject to different rates of inflation. Right? Now the question is, how do we solve? How do we solve non-symmetrical inflation problem? That will be little challenging. So there is a small guideline from our side. In case of non-symmetrical inflation, it is advisable to convert into the terms in which the discount rate is given. So if discount rate is given in nominal terms, it is better to convert all cash flows into nominal terms. If discount rate is given in real term, it is better to convert all cash flows into real term. But always follow the instruction given in the question. Some problem specifically requires you to use nominal discount rate or nominal cash flow concept. Then you don't have a choice. Then you will do whatever is the instruction in the problem. First priority always to be given to the instruction given in the question, and then you can follow your own wishes. Problems in investment decision due to inflation. So what are the challenges when we solve capital budgeting problem based on inflation? Future is uncertain. Who knows it better than you? Is it right? Who knows it better than you? CA student. Future is uncertain. Anything can happen. Suddenly syllabus can change. Suddenly new chapters can be added. Suddenly the pattern of exam can change. Suddenly articleship provisions can change. So future is uncertain. Hence, it is difficult to project future rate of inflation. Future rate of inflation we cannot predict with accuracy. Similarly, we cannot predict demand and other factors which may be affected by inflation. If due to inflation, if the price rise, the demand can also change. In this chapter, we are not taking into consideration the fact that a rise in price level can affect the future demand of the product, because difficult to correlate the two and find out exactly by what percentage the demand can change. And the third is problem with carrying out the analysis whether to express forecast cash flow in real term or nominal term. So these are some difficulties in solving capital budgeting problem. But don't worry, you are a student. You will be supplied with all the data that is required to solve the problem. It is now up to you to use that data, use your intelligence, use your knowledge and get the answer. So tell me, are you ready for inflation based question today? Those who are ready will say yes. Yes, very good. So we are starting with first question, a very basic question on capital budgeting and inflation. This question was asked in RTP some years back. Some years back this question was there in the RTP. So we have tried to accumulate all questions on inflation and capital budgeting which have been asked in your past exam, RTP, study material, etc. at one place. Now you will get all questions of inflation. AS Limited is examining an investment proposal requiring an initial outflow of rupees 8 lakh. Initial outflow is 8 lakh and expected cash inflow in real terms. When the problem setter is giving you clear information, expected inflow in real terms, that is today's purchasing power is rupees 2,80,000 per year for next 4 years. The company's out of pocket monetary cost of capital is 9%. Out of pocket monetary cost of capital is 9%. All of you please reply. Please reply. Please participate. Otherwise there is no fun of learning and there is no fun in teaching. Is it right? Then it is better to record it and give it to you. Live session means you have to join and answer whether out of pocket monetary cost of capital is nominal discount rate or real discount rate. Whether this discount rate given to you is nominal or real. Nominal or real. Some students have replied nominal. Nominal is right. Nominal is right. And inflation is expected to be 3.2% per annum over the next 4 years. So basically what they have given is cash flow in real terms 2,80,000, but the discount rate is nominal discount rate 9%. Inflation rate is given 3.2%. Right now you cannot discount cash flow with this discount rate because cash flow is real, discount rate is nominal. So you need to convert this either real cash flow into nominal cash flow, or you need to convert the nominal discount rate into real discount rate. Is it right? Otherwise you can't go ahead. Question is compute company's real cost of capital. So first question is real discount rate, which I can find out from nominal discount rate and inflation, So this will be 1 plus nominal discount rate upon 1 plus inflation rate minus 1. We have seen the logic of the formula. I had given you an example of a bat where quality improvement is 10%, inflation is 10%. From that logic this formula was designed. Second question is, once you compute real discount rate, you can find the present value of cash inflow, not NPV, only inflow, using real cost of capital. So first step will be real discount rate. Second question will be present value using real cash flow and real discount rate. And the next one, compute nominal cash inflow from real cash inflow. Oh my god, one more time you have to solve. You have to convert real cash flow into nominal cash flow by using the formula nominal cash flow equal to real cash flow into 1 plus I to the power n. Okay, and also calculate present value on the basis of nominal cash inflow, and then PV of cash inflow using nominal cash flow and nominal discount rate. Oh my god, this is what is the question from RTP. Very basic and fundamental question, should not take more time. So first write down step 1. First write down step 1, real discount rate. Real discount rate. Real discount rate is equal to 1 plus nominal discount rate upon 1 plus inflation rate minus 1. Then write down is equal to 1 plus 0.09 upon 1.032 minus 1. Please solve. Give me the answer. Give me the answer. This is a participation of yours also required. The answer will not come directly. Answer will come after you will respond. Okay. This is a special style of learning. The student has replied 5.62%. Correct. 5.62% is real discount rate. 5.62% is the real discount rate. Step 2, write down. Step 2, calculation of PV of cash inflow. Calculation of PV of cash inflow using real discount rate. Calculation of PV of cash inflow using real discount rate. So this is your chance to reply. What will be PV of cash inflow using real discount rate? Real cash flow is 2,80,000 per year. Real discount rate is 5.62%. Time is 4 years. Please reply. What is the PV of cash inflow? What is the PV of cash inflow? What is the PV of cash inflow? I am waiting for your answer. You are waiting for me and I am waiting for you. I am waiting for you. Please reply. PV of cash inflow. PV of cash inflow is 2,80,000 into PV annuity factor into PV annuity factor. And I am waiting for you. I am waiting for you. Please reply. Okay, check the answer now. 978,740. 978,740. 978,740. Is it right now? 978,740. Any query on this? Do not expect me to explain factor now. You are too old for that. Have you got this factor right? Have you got this answer right? Okay. Very good. We appreciate your hard work. Now we'll come to case number 3. I have to compute nominal cash flow from real cash flow and then use nominal discount rate. So write down please, calculation of NPV using nominal cash flow and nominal discount rate. Calculation of NPV using nominal cash flow and nominal discount rate. First you write a formula for nominal cash flow. Nominal cash flow equal to real cash flow into 1 plus inflation rate to the power n. And what I'll do, I'll draw a table first, because every year nominal cash flow will change because of inflation. First column year, draw in your notebook. Second column cash flow real. Third column cash flow nominal. And to convert cash flow into nominal, you will apply this formula. Then discounting factor at 9%, this is already given. Discounting factor 9% is already given. And the last column is discounted cash flow. Okay. Discounted cash flow means present value, or you can just write present value if you are familiar with that. First column, year column complete, 1, 2, 3, 4. Cash flow real is 2,80,000 every year, real without inflation. Nominal will be, your inflation rate is 3.2%. 2,80,000 plus 3.2%. 2,80,000 plus 3.2%. 288,960 plus 3.2%. This is shortcut, plus 3.2%. 298,207 plus 3.2%. 307,749 and plus 3.2%. You will get 317,597. So this is my task. I can take you up to this. Remaining 2 columns, your task. You have to compute. You have to learn. You have to do it. Yes, come on. Compute the present value total. Compute the present value column total. Compute the present value column total. All of you please do it. Take 9% factor first, and after taking 9% factor, multiply and take total. Multiply, take total. Multiply, take total. Use memory plus function. Anybody for the total? Anybody who got the total would like to reply? $978,722 approximately. Write approximately. Whatever you have got, write approximately. If first 3 digits are right, then you are right. First 3 digits are right. You can go ahead. Very good answer. Now just check. This answer is equal to your previous answer. Just check. Note, answer is same under both approaches. Answer is same under both approaches. Is it right? Answer is same under both approaches. That is what I wanted to demonstrate. Whether you use nominal cash flow and nominal discount rate, real cash flow and real discount rate, if the calculation is done properly, the 2 answers will be same. Any query on this question? Any query on this question? Yes or no? If no query, then we'll go to Another very important question, number 2. This question, source, write down reference book. This question you will not find in institute publication, but it's a good question, high quality question, and therefore you need to solve. Everything will not come from institute study material. I hope you know that. If it was so easy, it was not called C exam, it was called BCom exam. We have to go beyond the study material and do something extra. If you do extra, you get extra marks. That is the rule. Consider the following information relating to a project that involves an outlay of rupees 10,000 in year 0. First year 0 outflow 10,000 and yields an annual inflow of 3,000. Underline, in real terms. In real terms, the cash flow is in real terms. Depreciation is on straight line method. Life is easy. This time depreciation is also there. This time depreciation is also there. Salvage value is 0. Very good. All cash inflows. Cash inflows are subject to 7% inflation, which means sales. They are talking about sales. Sale is subject to 7% inflation, while all cash outflows are subject to 8% inflation. So they are talking about expense. This expense is subject to 8% inflation. Then in the table, the nominal discount rate is 14%. Nominal. So what I'll do, I will compute nominal cash flow only. Nominal cash flow, nominal discount rate will get NPV. This table is given to you is in real terms. How do you know it is in real terms? It is written here 3,000 and 3,000. They are matching. So which means the given information is in real terms. Ready? Sales, expense, PBT, tax rate 60%. Oh my God, very high. Profit after tax, depreciation they have written separately. Depreciation tax shield, 2,500 into 0.6. What is 0.6? 0.6 is the tax rate. What is 2,500? Anybody, what is 2,500 here? What is 2,500 here? Can you please answer what is 2,500? 2,500 is depreciation. 10,000 is the cost. 2,500 is depreciation. What is the life of the project? What is the life of the project? 4 years. That was a hidden information. Many students could not get it. Life of the project is 10,000 divided by annual depreciation 4 years. Salvage value is not there. Net cash flow is given. I don't have to use this table, but I have to use some information from this table. For example, I will require tax rate. I will require depreciation. I will use this number to start with. Not exactly same number, but I will add the inflation to that number. Ready? Evaluate the project for acceptability. If NPV is positive, we'll accept. If NPV is negative, we'll reject. So first you write down one heading, main heading, followed by working note. Heading, write down evaluation of the proposal. Evaluation of the proposal to undertake a new project. Evaluation of the proposal to undertake a new project. Evaluation of the proposal to undertake a new project. That is the heading. Below that write calculation of NPV. Calculation of NPV. Calculation of NPV. first write down year, second column write particulars, third column cash flow, fourth column discounting factor at 14%, and last column DCF or PV, DCF or PV, present value, DCF or PV. Okay, have you drawn the format? Simple format. Year 0, what happened in year 0? Cost of the project 20,000, sorry 10,000. Discounting factor you will write yourself, multiply you will do yourself. My task is to give you cash flow. Year 1 write down CFAT, CFAT, CFAT. Okay, and you write here refer working note. We have to prepare working note for this. We have to prepare working note for this. Do we have salvage value in this question? No. Do we have recovery of working capital in this question? No. Is it right? So what you do, come to keep 5 lines blank, 5 line blank, below that write working note 1. Working note 1 write down calculation of CFAT. Calculation of CFAT. Calculation of CFAT. Please reply. How many years are there? 4 years. Draw this table. Serial number, particulars, year 1, year 2, year 3, year 4. Year 1, year 2, year 3, year 4. Sales are subject to 7% inflation. Cash expense are subject to 8% inflation. Depreciation is not subject to inflation. So with that knowledge, start. First write down sales in real terms. Real terms it will be same, 7,000, 7,000, 7,000, 7,000. Okay. Sales, now this is relevant. Nominal, sales nominal. Real cash flow into 1 plus I to the power n. And what is I here? Inflation. You can write in bracket where I is equal to 7%. Where I is equal to 7%. Where I is equal to 7%. Now see how to get the answer. How to get the answer? You type 7,000 plus 7% because all year are 7,000. If it was different, then you have to do separately. 7,000 plus 7%. After 1 year with inflation, your revenue will be 7,490 plus 7%. Plus 7%. Come on, 8,014 plus 7%. Plus 7%. Keep trying, keep trying. Go ahead, go ahead. Next column. Don't wait for me. Round off the number. Don't write in decimal. Don't write in decimal. You are a big boy now, big girl now. Next point, number C. Cash expense real. Cash expense real. Copy from the book. Cash expense real. Now write down cash expense nominal. Cash expense nominal. Nominal is equal to real cash flow into 1 plus I to the power n, where I is equal to 8%. Where I is equal to 8%. Okay. Again you take your calculator, 3250 plus 8%. That will help you. 3510 plus 8%. 3791 plus 8%. 4094 plus 8%. 4422. 4422. 4422. Point number E, depreciation. Depreciation will not be subject to inflation. Depreciation will be constant because straight line method. So depreciation will be constant. This is my sales, this is my expense, and this is my depreciation. Sales minus expense minus depreciation. What will you get? Sales minus expense minus depreciation. What will you get? If you are an account student, what will you get? Profit before tax. Profit before tax. So you will write B minus D minus E. B minus D minus E. So please take on your calculator 7490 minus 3510 minus 2500 minus 2500. So would you please calculate? Yes, PBT was right. Very good. First column is 1480. Can you reply second column? Second column, please. This computer will not move unless you reply. 1723. It is programmed like this. Once you reply, then it takes the number. Third year, 1981. Third year 1981. Yes, next. Fourth year 2254. Very good. 2254. Now compute tax at the rate 60%. Compute tax at the rate 60%. First you type on your calculator 0.60 into 1480. You will get 888. Now just type this number. Just type 1723, press equal to. You will get the next answer 1034. Type this number equal to. Check the answer. This is your taxation. Now I have to reach CF80. My question to all of you, what will be CF80 of the first year? What will be CF80 of the first year? Please reply. What will be CF80 of the first year? Anybody who would like to try CF80 of the first year? There are two ways you can do it. One, Mr. Srinath is saying 2254. Anup is saying 3388. Which is right? Okay, let me check. This is my inflow, this is my outflow, and this is my outflow. B minus D minus G. B minus D minus G. Very good, Srinath. Keep trying. So now the answer is 3092 is right. 3092 is right. Or you can write F minus G plus depreciation E. F minus G plus E is also okay. F minus G plus E is also okay. 3092. So now you got the trick. Please quickly reply second year. Please quickly reply second year. Second year 3189. Check. Second year 3189. Anybody next? 3292. 3292. 3292 is right. Please confirm, is it right? And then 3402, last one. Is it right? 3402. 3402, is this right? Okay. Srinath Is it right? What you do, please transfer these 4 numbers, main answer now, to the main answer. Transfer it to the main answer where we have to compute NPV. Transfer it and compute NPV. My job is done. My job is done. So the student will have to now find out the NPV. These numbers take to the main page, discount at 14% and find the present value. Discount at 14% and find the present value. So we are on the main page right now. CF80 3092 3189 3292 3402. Okay. Very good. Now you compute NPV. Compute NPV. Discounting factor is 14%. Take 14% factor. After that, multiply cash flow into PV factor and solve. Anybody who can confirm that this NPV is 598 negative? Is NPV 598 negative? Yes, the student has confirmed NPV is 598. So if your NPV is negative 598, what is your decision? Would you accept the project or would you not accept the project? So write down the advice. Advice, write down. The company should not accept the proposal. The company should not accept the proposal as the NPV is negative. As the NPV is negative, company should not accept the proposal as the NPV is negative. Okay. Anybody, any query on this question? Sajid, any query? Hari, any query? Divya, any query? Anup or all any other student who have a query? No query, we'll go to the next question. Just write one note below. Write one note below. The life of the project was not given, so I'll make a working note for you. Life of the project is equal to 10,000 divided by depreciation 2,500. So life of the project is 4 years. The life of the project is 4 years. Is it right now? Life of the project is 4 years. Did you enjoy this question? Say yes. Yes. Now we'll come to question number 3. Question number 3. Source, write down reference material, reference book. Source, write reference book. Institute material has very limited number of questions and plus they are oversimplified also. Question is AS Hospitals. Wow, AS Hospital proposes to buy a DNA testing equipment. So what is the capital budgeting program? To buy a DNA testing equipment. Have you heard about DNA? Have you heard about DNA? Yes or no? Yes. If you have heard, good. Even if you have not heard, you are not going to lose anything. We are interested in this number, 30 lakh. Equipment will cost 30 lakh. What that equipment does, none of the business of CA. Okay, we have to give the proposal and check it is right or not. Okay, so DNA testing equipment is very useful for lot of needs of the government, hospitals, human beings. The equipment is expected to reduce clinical staff cost by rupees 10 lakh annually. So what is the saving? 10 lakh per annum. If you purchase this equipment, you will save rupees 10 lakh per annum. But the question is not clear. The question is not clear whether this 10 lakh per annum is real or nominal. So please guess. No money for guessing whether this 10 lakh cash flow is real or nominal. Nobody is responding. Just you have to say real or nominal. If it is right, no prize. If it is wrong, no punishment. So real, you are right. Because if it was nominal, it will not be same in every 3 years. Then it will be different in different years. Inflation in clinical cost is 6%. So my saving will be not 10 lakh, saving will be 10 lakh plus 6%, plus 6%, plus 6%. The equipment will have a useful life of 5 years. So we have to go up to 5 years. But will be written off over 3 years under SLM for income tax purpose. For the purpose of depreciation, 3 years, only for depreciation. But for CFAT purpose, the life is 5 years. These are some basic things you have to keep in mind. One more variable we have added in our question now, working capital requirement. It was not in the previous two questions. Working capital requirement is 5 lakh. That is at the beginning, year 0, and it will be recovered after 5 years. It will be recovered after 5 years. Okay. Next is corporate tax rate is 40%. You may assume that company has sufficient profits to absorb losses, if any, from this project. Sir, what is the meaning of this line? The meaning of this line is that if suppose there is a loss in the first year, suppose that loss can be absorbed. The loss can be absorbed in the same year. If the loss can be absorbed in the same year, there will be tax saving in the same year. If the loss cannot be absorbed in the same year, losses are carried forward to the subsequent year, then the tax saving will be in the subsequent year. So in this question, if there is a loss, it will be absorbed in the same year and you will get tax saving in the same year. Okay. The required rate of return is 15% post-tax. I am going to ask you one more question. Whether this required rate of return 15% post-tax is it real discount rate or nominal discount rate? Little fast so that I can understand. Is it real discount rate or nominal discount rate? If this question comes in your exam, which is not in the study material, what is your answer? 15% discount rate, is it real or nominal? Real or nominal? Real or nominal? Okay. Some students are saying real. Some are saying nominal. What do? I will take a coin toss. Whatever I get accordingly, right? We will interpret it as nominal. Nominal is right because it is given post-tax. Post-tax means the tax was calculated using nominal number only. Tax was calculated using nominal cash flows only. So we will interpret this as nominal discount rate. Should the hospital go for the equipment? Srinath is right, nominal. Should the hospital buy DNA testing equipment? For that we need to find out the NPV of the proposal. Write down, first heading write down, start with a nice caption. Evaluation of the proposal to buy DNA testing equipment. evaluation of the proposal to buy DNA testing equipment. Evaluation of the proposal to buy DNA testing equipment. Please ask your other friends also to join. Draw this table now. Calculation of NPV. Calculation of NPV. Then draw this table. Year particulars, cash flow, discounting factor at 15%, and discounted cash flow. Instead of writing discounted cash flow, you can write present value. You can write present value, DCF or present value. First we will write down in year 0. In year 0 we have two outflows. In year 0 we have two outflows. One, cost of equipment 30. Cost of equipment 30. Year 0, one more outflow will be there, working capital 5. Then you write down rupees in lakhs. If not written, write rupees in lakhs. Write rupees in lakhs here. To get full marks, write everything. After that, write down CF80 for 5 years, and the source of the answer will be working note 1. Then in the year 5, recovery of working capital. This working capital will be recovered in the year 5 and the amount is 5. Now there are two answers here possible. Two answers are possible here. One answer is 5. Working capital is not subject to inflation. Second answer can be working capital is also subject to inflation. Working capital is also subject to inflation, and in that case we will have to find out what will be the inflated value of that working capital. Is it right? So usually, unless otherwise specified, we take the same value. We assume working capital is not subject to inflation, but some problems may give you that also. In that case, we will take the inflated value of working capital. I will give you a note for this. Don't worry. This question is subject to certain assumptions. So what is my next task now? What should I do now? Please suggest. What should I do? What should I do? I should make a working note. Keep 5 lines blank for writing advice, and then working note 1, calculation of CF80. Calculation of CF80. Calculation of CF80. This is a 5-year problem. For depreciation will take 3 years. For depreciation purpose will take 3 years. So first you write serial number, particulars, year. Under year 1, 2, 3, 4, 5. Take a scale, draw lines. If you have scale at home. If you don't have, go to some neighbor, borrow and come. First point A, saving in clinical cost in real terms. Saving in clinical cost in real terms. Saving in clinical cost in real terms 10. Then we'll write saving in clinical cost in nominal terms. In nominal terms equal to real cash flow into inflation is 6% into 1.06 to the power n into 1.06 to the power n. Take 10 plus 6% plus 6% plus 6% plus 6% plus 6%. Is it right? Is this right? Any query on this? and then write down depreciation. There is no other cost or expense. So depreciation will be over 3 year. 30 lakh divided by 3 year. Depreciation would be 10, 10, 10 only for first 3 years. Is it right? Now the next point is PBT nominal. PBT nominal B minus C 0.6, 1.24, 1.91, 12.62, 13.38. This is the amount by which your tax or your profit will increase. If you purchase this equipment, your profit will increase by these amounts, but because your profit will increase, we'll have to pay tax also. Tax at the rate 40%. Shortcut 0.4 into 0.6, 0.24. Just type 1.24, press equal to. Just type 1.91, press equal to 0.76. Press 12.62, press equal to, and the last one 5.35. Please check the answer. Please check the answer yourself. Is it right? Confirm, is it right? Don't depend on me for the answer. Okay. Calculations can be wrong at my end also. Next point, CF80. CF80 can be calculated by simply taking inflow minus outflow. Saving is inflow, tax is outflow. B minus E. B minus E. Come on student, B minus E, you can do it. 10.36, 10.74, 11.15, 7.57, 8.03. Is the answer right? Is the answer right? You can do it. Simple mathematics. No great effort involved. Is the answer right? Okay. So what do I do now? This time I will not do it. You will do it. Take this 5 CF80 number to the main page. Put it there. Use the factor. Find the NPV. If NPV is positive, you will accept the project. So I'll give you 1 minute to complete NPV. 1 minute starts now. 1 minute already started. 10 seconds over. 10 seconds over. I am waiting for you. Only when you will reply NPV, we will move ahead. Write nicely. Write everything. Okay. If you write everything, it is important that you can revise in later stage easily. If you don't write, you will not be able to revise. So this is the answer. Please check. Please check. Is the answer right? Yes, the student has confirmed. The answer is right. 0.26 positive NPV. 0.26 positive NPV. If NPV is positive, what is the advice you will write? The advice would be ES hospitals should buy DNA testing equipment. Should buy DNA testing equipment as NPV is positive. As NPV is positive. Is the answer right? Point 26. As NPV is positive. As NPV is positive. Have you noted this advice? Have you noted this advice? Yes. Now the next point, assumptions. Assumptions, right? Assumption number one. Saving in clinical staff cost. Saving in clinical staff cost given in question is in real terms. Saving in clinical staff cost given in question is in real terms. Saving in clinical staff cost given in the question is in real terms. Second assumption, discount rate given in the question is in nominal terms. Discount rate given in the question is in nominal terms. Discount rate given in the question is in nominal terms. Third assumption, right? Third assumption, working capital is not subject to inflation. Third assumption, right? Assumption 3, working capital is not subject to inflation. 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 So this is the answer of this question. If you still have a query, you can ask me. Do you have any query? No? We'll go to question number 4. Question number 4, again it has lot of adjustment. Are you ready for question number 4? Say yes. AS Limited is considering an investment in a new project which cost rupees 12 lakhs. First write down the source. Reference book. This first, second, third, fourth questions were from reference book, but I am sure they will help you to understand the concept of inflation and capital budgeting. Let us revise question again. AS Limited is considering an investment in a new project which costs rupees 12 lakh. Earning before depreciation and tax are estimated at 3,75,000 in real terms. Very good, underline. So this EBDT, earning before depreciation and tax, which means this is basically sales minus cash expense. EBDT means sales minus cash expense in real term for each of the 5 years. So this is 375 real terms. We have to convert into nominal terms because tax calculation will be based on nominal. At the end of 5 years, the machinery can be sold for its book value, depreciation being 25% WDV. Oh my God. Depreciation is WDV. So that will increase my workload. Plus one more instruction. At the end of 5 years, machinery can be sold for its book value. The meaning of this line is that salvage value of the asset is equal to WDV of the 5th year. WDV of the 5th year after depreciating in the 5th year, whatever is the WDV, that is the salvage value. Since you are intelligent student, can I ask you a question? Can I ask you a question? The question is, what will be capital gain tax on this? Will any tax be paid on sale value? Will any tax be paid on sale value? In this question, will any tax be paid on sale value? Yes or no? Only say yes or no. Will you pay tax on sale value? Yes or no? Okay. The answer is no. The answer is no, because sale value and WDV are equal. So net profit is 0. If net profit is 0, where is the question of tax? Tax is paid when you have profit. There is no profit on sale. You are right. SS Srinath is right. Very good. Next line. Working capital requirement at the beginning of each year is as under. Working capital requirement at the beginning of each year. What is beginning of each year? Means this is actually year 0. Year 1, 2, 3, 4. If they have written year 1, you actually will require working capital today. If it is written beginning of year 2, which means end of year 1, beginning of year 3 will be end of year 2, like that. So this time working capital requirement is changing. I will have to add more working capital every year. I have to add more working capital every year. Following additional information is relevant. Nominal discount rate. Nominal discount rate is given. No question on this. Working capital can be realized at the end of the 5th year. Working capital will be realized at the end of the 5th year. Even if this line was not given, we will do the same thing. Then inflation is expected to be 4% on all operating cash flow. And for working capital, oh my God, this time the problem says even working capital requirement will be subject to inflation. So they have written here 2 lakh rupees, but its inflated value will be more than 2 lakh. You have to add 4% to that. Okay, this is in real term. These working capital given are in real terms. You will have to adjust inflation also at 4%. Tax rate 33, neither 30 nor 35, 33. And now it says all cash flow occur at year end. All cash flow occur at year end except for purchase of machinery and working capital, which occur at the beginning. So working capital requirement at beginning is already written. Everybody knows when you invest in a project, unless otherwise specified, the investment in asset will be at the beginning, that is year 0. Evaluate the project and determine its acceptability. Good question. Will you do as homework or should we do as classwork? Please confirm, classwork or homework? Classwork or homework? If you don't say anything, I will give homework. But if you say classwork, then I will take classwork. Student have quickly replied classwork. Okay, very good. Write down. First I will draw the main format, followed by working notes, not note, notes, more than one working note. Okay, so write evaluation of the proposal to invest in the project. Evaluation of the proposal to invest in the project. Under that write calculation of NPV. Calculation of NPV. Please solve all these questions. They are very useful. Write down table, year, particulars, cash flow, discounting factor at 16% and discounted cash flow and discounted cash flow and discounted cash flow. After drawing the format, you can write cost of the project. Cost of the project is 12 lakh. Discounting factor and present value you will calculate. Last column heading you can write present value. Working capital write 1 lakh. Working capital at the beginning of year 1. Working capital at the beginning of year 1 means year 0. Beginning of year 1 is year 0, 1 lakh. And then write down CFAT, operating CFAT. I'll prepare second working note for that. First working note will be working capital requirement in nominal terms. Second working note will be CFAT, working note 2. Then write down year 5, one more cash flow. Salvage value of the project. Salvage value of the project. But that amount we will write later, because I need to find out what will be WDV after 5 years. That amount I will write later. And one more thing, write down recovery of working capital. Recovery of working capital amount will write later, not 1 lakh, because some more working capital was added in the project. Amount will write later. So don't worry, these two figures will also come later. Have you drawn the format? Everybody, have you written the information which is available right now? Please confirm yes. Very good. Now you write down first change in working capital. Change in working capital. Change in working capital in bracket nominal. Change in working capital nominal. Draw this table. Serial number, particulars. Now in the question they have written 1, 2, 3, 4, 5. But I am not writing 1, 2, 3, 4, 5. I am writing 0, 1, 2, 3, 4. I am writing 0, 1, 2, 3, 4 to avoid any mistake. Write down first here point A, working capital required real. Working capital required real. Everybody look at the question book. Copy from the question book. From the question book. 1 lakh, 2 lakh, 3 lakh, 4 lakh, 5 lakh. Then first we'll convert into nominal. First we'll convert into nominal. Write down working capital required nominal. inflation rate is 4%. Inflation rate is 4%. Inflation rate is 4%. Year 0 figure will remain same. Never add inflation to year 0 figure. The inflation will take effect only with the passage of time. Now tell me, first year, this 2 lakh into 1.04. 2 lakh into 1.04. 2 lakh into 1.04, 2 lakh 8,000. 3 lakh into 1.04 square, because it is 2 year. So you will take 3 lakh plus 4% plus 4%. 324, 480. This will be 4 lakh into 1.04 to the power 3. So type 4 lakh plus 4% plus 4% plus 4%. You will get 449946. In the same way, 5 lakh into 1.04 to the power 4. Working capital is subject to 4% inflation. Answer please. What is the answer? 584,929. If you want to write calculation, you can write, so that later on you have no confusion. Please, if you think you will have doubt in future, write the calculation. If you are sure, please go ahead. Working capital requirement in nominal terms we have computed. We have invested 1 lakh here in year 0, but our requirement is 2 lakh 8,000 in the beginning of year 2, end of year 1. So how much more working capital will be required? Right, increase in working capital. Very important point. So what is the mistake the student can make? The student will not go to this line, they will simply take 2 lakh 8,000. You are wrong, because I have to find increase in working capital. 1 lakh is already there, 2 lakh 8,000 is required. So I will have to add, infuse 1 lakh 8,000 more. Go to next column, take this difference. Take this difference, 116,480. Go to next year, take this difference, 125,466. Very good. Next, take this difference of these two. Take the difference of these two. Come on, reply. 134,983. 134,983. I will request you to please check this yourself. Is it right? Is it right? Is it right? Yes. I am going to require these numbers in the next calculation. Is it right? Before I go to the next calculation, how much is my total working capital invested? My total working capital invested is 1 lakh plus, which means it is equal to 584,929. 584,929 is my total working capital requirement. Is it right? Which will be recovered at the end of the 5th year. So what you do? Go to the main page. Go to main page, last line. Main page, last line. Recovery of working capital. Recovery of working capital, put this number. 584,929. 584,929. In the main page, last line, recovery of working capital 584,929, positive number. 584,929 positive number. Right. So this last line, working capital recovery, we have done. Now the next important working note 2 is operating CFAT. Operating CFAT nominal. Operating CFAT nominal year, under year, please write 1, 2, 3, 4, 5. Year 1, 2, 3, 4, 5. If you have scale pencil, draw lines. About 10 to 12 lines you can draw. If you don't have scale, ignore. First point A, EBDT. EBDT real, write down real, given in the first few lines only. Keep the notes in front of you. Without notes you will not be able to understand. 3,75,000. 3,75,000 nominal. I have to add inflation 4%. So you will have to write here nominal cash flow is real cash flow into 1.04 to the power n into 1.044% is inflation. So how do I do it fast? How do I do it fast? 3,75,000 plus 4%, 390 plus 4%, plus 4%, plus 4%, come on, and plus 4%. So this is your nominal cash flow. This is your nominal cash flow. Now write down depreciation. This is before depreciation. Depreciation point number C, opening WDV, and below that point 2, depreciation at 25%. Depreciation will be 25%. Opening WDV, write 12 lakh. Depreciation rate is 25%. Divide by 4. Divide by 4, you get 3 lakh. Next year opening balance 9 lakh. Divide by 4, 2,25,000. Next year opening balance 6,75,000. Divide by 4, 168,750. Next year 5,06,250. Divide by 4, 126,563. Last year 379,687. Divide by 4, 94,922. Wait a minute. What will be WDV after 5 years? What will be WDV here? Can you please calculate WDV for me? What will be WDV? I will require that in the main answer. 379,687 minus 94,922. 284,765. Please check, is it right? 284,765. Is it right? Where will you transfer it? Go to the main page. Main page, last second line. Main page, last second line. You have written salvage value. Write there 284,765. 284,765. And in bracket write down in main page 379,687 minus 94,922 minus 94,922. Is it right? Can we move ahead? Now write down PBT. PBT will be point B minus point C2. Point B minus point C2. Take this line minus this depreciation. Okay, do it yourself. 390 minus 3 lakh, 90,000. 4,05,600 minus 2,25,000. 1,80,600. Yes, very good. Move ahead. Next one. 253,074. Is it right? Go ahead. Next one. Next one. 312,134. Next one. 361,323. 361,323. Tax at the rate 33%. Shortcut. First you type 0.33 into 90,000, 29,700. Type this number, press equal to 59598. Type this number, press equal to 83514. Type this number, press equal to 1,03,004. Last one, 119,237. Okay. CFAT nominal will be cash inflow minus tax payment. Just these two lines will serve the purpose. B minus E, or you can take PBT minus tax plus depreciation. That is also okay if you are comfortable with that, or D minus E plus C2 if you are comfortable with that. D minus E plus C2. Yes, please reply. 360, 300, 346,002. Write in notebook nicely. Every friend of yours will ask for your notebook. We are going to write so nicely all these answers. 338, 310. I have arranged the question in the level of difficulty also. 335, 693. 337,008. 337,008. Ask all your friends to join, and they can also ask question if any. Then we'll come to one more thing. Do you remember we have prepared one working note, increase in working capital? If working capital increases, cash flow decreases, because it is also like an investment. So increase in working capital, I am going to deduct from CFAT and I will get operating CFAT. Do you remember in your intermediate cash flow statement, you have deducted increase in current asset, yes or no, as a deduction? More investment is required. So this I have to deduct. Go to working note 1. Working note 1, increase in working capital, first 4 years only. What about 5th year? 5th year will be recovery. Recovery we have already written. Recovery we have already written. So now write down point number H, operating CFAT. Operating CFAT will be CFAT we have computed, and I will also deduct increase in working capital. So please take the difference in this two column. Please student, please cooperate and reply. First year 252, 300. Second year 229, 522. Third year 212, 844. Fourth year 2,07,10. Last year same figure 337,008. 337,008. Now what I'll do, these numbers I will transfer to the main page. Transfer to the main page. On the main page you have written operating CFAT. In front of that, year 1 252 300, 229 522, 212 844, 2,710,000, 337,008. Is it right? Go to the main page. Put these numbers here. Put these numbers here as per your working note 2. Salvage value of the project 284,765. In bracket write the calculation. And recovery of working capital, working note 1, you have written 584,929. We have prepared working notes for everything. We have written calculation for everything. Now the student will have to solve and reach this NPV. Just check the answer. You can do it. If you have doubt, check from the screen. Everybody will first check the answer. Don't copy. Do it yourself. It is like a practice. It is like a test. Don't practice in the exam. Some of you practice in the exam. You think exam is a test series and the fees is only 2,500 or something. Very expensive because the cost is your 6 months. More practice in the classroom with the teacher is very useful rather than practicing directly in the exam. Is the answer right? 90165 negative. Who will confirm? Nobody has confirmed till now. Is the answer 90165 correct? 90165. Yes, Mr. Hari, is the answer right? Mr. Srinath, Bapat, okay. So negative 90367 you are getting. Okay, no problem. Any number which is close to 90,000 is right. Advice, write down. Advice: the project should not be accepted. Project should not be accepted because NPV is negative. Project should not be accepted because NPV is negative. First you write down this advice. Project should not be accepted because NPV is negative. Now I will give you some notes. Write down notes. First you have written advice, project should not be accepted because NPV is negative. Note, write down. For those who don't know, increase in working capital is cash outflow. Increase in working capital is cash outflow. Second note, write down. The effect of inflation on recovery of working capital is not given. The effect of inflation on recovery of working capital is not given because working capital will be recovered at the end of, underline at the end of, working capital will be recovered at the end of 5th year. The effect of inflation, will be beginning of next year. The effect of inflation will be beginning of next year. I'll repeat if you can't read. Second point, the effect of inflation on recovery of working capital is not given because working capital will be recovered at the end of the 5th year. The effect of inflation will be beginning of the next year, means 6th year, but we don't have to go to 6th year. We have to go only up to 5 years. Okay. Any query now? Preferably you should watch this lecture on laptop because we have so much of data on the screen. On mobile screen I don't know whether it is clearly visible or not. Okay, but choice is yours. Can we go to the next question now? Next question is from study material, also asked in November 2010 exam for 8 marks, May 2005 exam for also 8 marks, and our study material question is very easy. Okay, don't depend on this. Question number 5. A firm has projected the following cash flow from a project under evaluation. Year, rupees in lakhs, 0, 1, 2, 3. The above cash flows have been made at expected prices after recognizing inflation. What does that mean? This is nominal cash flow. After recognizing inflation means this is nominal cash flow. The firm's cost of capital is 10%. The expected annual rate of inflation is 5%. So how the viability of the project is to be evaluated? Again one area of doubt. What is the area of doubt? This one, whether this cost of capital, please reply little fast, nominal or real, whether this cost of capital 10% is nominal or real. Nominal or real? One student is saying real. Anybody else? Real or nominal? You just have to mention real or nominal if you are studying from home. So the answer is real, because if cash flow is nominal and if discount rate is also nominal, then there is no need to give this inflation data. Is it right? This is nominal is given, this is not given, but then if I assume it to be nominal, if I assume this is nominal, then my job is very simple. It becomes the first question of 12th standard. Just find the present value using 10% and the cash flows are given. So we will assume it is a real discount rate, and if you assume it is a real discount rate and nominal cash flow is given, first you have to find nominal discount rate. Write down method 1. Method 1 using nominal discount rate. I am going to solve this question twice. Nominal, nominal, real, real. First method 1 using nominal discount rate. Under that step 1, calculation of nominal discount rate. Under that formula which we have seen today, We have understood with the help of one example of a bat where the quality improvement was 10% and inflation was 10%, using that example only. Anybody answer for nominal discount rate? Nominal discount rate 1 plus 0.10 into 1.05 minus 1. So this comes to 15.5%. 15.5% is right. Now we'll come to calculation of NPV. Calculation of NPV, year, particulars, cash flow, discounting factor at 15.5%, last column DCF, or you can write present value, or we can write present value. DCF or present value, rupees in lakhs, write down rupees in lakhs, write down rupees in lakhs at the top right hand corner, rupees in lakhs, year 0, investment 70, 1 cash flow 30, 2 cash flow 40, 3 cash flow 30 given. These are already nominal cash flow, so I just need to apply the discounting factor. Nominal cash flow will be discounted using nominal discount rate. Take on your calculator 1 divided by 1.155, factor equal to. Now you can multiply and take the total. Please reply. First one 70, second one, yes, 25.974, very good. Third one, next one, come on, 29.984, very good. Next one, 19.47, 5.428, 5.428, is your NPV positive? Yes. Advice. Project should be accepted. Because NPV is positive. And one assumption we have made in our answer. Assumption, the given cost of capital is in real terms. The given cost of capital is in real terms. First method is over, although not required, but I am going to show you that you can solve the problem by real discount rate also, and you will get the same answer. So write down method 2. Using real discount rate. Sometime in the exam they specifically mention that solve by using real discount rate. Then how will you solve it? Cash flows are nominal. Nominal cash flow will be converted into equivalent real cash flow. Real cash flow will be discounted using real discount rate. So please write. Format first. Year. Cash flows nominal. Then next column, cash flow real, and then write down below that formula nominal cash flow upon 1 plus inflation rate to the power n. Nominal cash flow upon 1 plus inflation rate to the power n. 1 plus inflation rate to the power n. Then discounting factor at 10%, because now if cash flow is real, my discount rate will also be real. And the last column, present value, and you can write in the top right hand corner rupees in lakhs. Write everything, don't miss anything which is relevant for solving and getting full marks. Year cash flow, nominal cash flow real, then discounting factor, present value. So let us solve this amazing question one more time. Year 0, first you copy from the question book this nominal cash flows given. Now we'll go to nominal cash flow will be converted into real cash flow. Year 0 will be same. What about the next one? 30 divided by, how much was inflation? 5%. 30 divided by 1.05. Come on, 30 divided by 1.05. 28.57. 28.57. 40 divided by 1.05, 2 times equal to 36.28. 30 divided by 1.05, 3 times equal to 25.92. Okay, so that is how you will convert nominal cash flow into real cash flow. You are removing the effect of inflation from that. If there was no inflation, what would have been your real cash flow? Now you can use discounting factor and present value calculation. So discounting factor at 10%, right? Discounting factor at 10%, write down. Come on student, come on. Next, multiply, take total. Multiply, take total. How much is that? 70, 25.97, 29.98, 19.47, and the last one is 5.42. You will be very happy to note that the answer under the two methods are equal. The answer under the two methods, this we have proved in first question also, and this now we have proved in the fifth question also. So advice, write down. Projects should be accepted. Because NP is positive. One note, answer under two methods are equal. Answers under two methods are same. Answer under two methods are same. Now what you will do in the exam, if nothing is given, you have to solve only once. I have solved by both ways, because if they ask a particular method, then you can follow that method also. Okay. So now we'll first take a break of 10 minutes and we will start after 10 minutes. Is it right? So enjoy the break, have tea, biscuit, lunch, dinner, whatever you want. See you after 10 minutes. Okay, welcome back. I hope you have enjoyed till now. Are you enjoying? Those who are attending live session, are you able to understand and enjoy this amazing topic? So let us come to next question number 6 now. Next question number 6. Question number 6 now. ASF generated the following cash flow forecast in real terms. Underline real terms. Underline real terms. Capital expenditure. Oh my God, question is not complete. So write down capital expenditure year 0, 1, 2, 1, 0. You have to write. Purposefully it was done so that you will concentrate. Revenue 1900, 2000. Then cash expense, right? Cash expense 950, 1000. Depreciation, right? Depreciation, right? 605, 605. ASF estimates the inflation to be 10% per year over the next 2 years. Inflation is 10%. These all cash flows are in real terms, except the depreciation. We have to inflate revenue and expense. ASF believes that cash flow should be discounted at nominal rate of 15.5%. If the problem says cash flow should be discounted at nominal rate of 15.5%, which means this time I have to compulsorily convert this cash flows into nominal cash flow. First I have to convert into nominal cash flow and then use nominal discount rate. One more adjustment, tax rate is 30%. Below that they have written compute NPV using nominal cash flow technique, but they have added one more question, compute NPV using real cash flow technique. If real cash flow technique is to be used, I need to convert nominal discount rate into real discount rate and nominal cash flow into real cash flow. Up to nominal cash flow we have to compute because we have to compute taxation. Tax is always in nominal terms. So this is a very good question and the source is a reference book. We have to study advanced question also. The topic is advanced capital budgeting and therefore I have brought some advanced version. So write down the answer. The answer is very easy. Calculation of NPV using nominal cash flow approach. Calculation of NPV using nominal cash flow approach. We will draw a table with 10 columns. Year, cash flow, real, then cash inflow nominal, cash expense, nominal, depreciation, PBT, after PBT directly PAT, which is 70% of PBT, then CFAT nominal, discounting factor at 15.5% and PV. Draw this table first. Write down column numbers also. Please write column number also. Column number 1, 2, 3, 4, 5. 6 will be 3 minus 4 minus 5. 3 minus 4 minus 5 is PBT. Column number 7. 8 will be PAT plus depreciation. Column number 7 plus column number 5, PAT plus depreciation. Then 9th number is discounting factor. 10th number is present value. Okay, so we'll go column by column. First column write year 1, year 2. Second column write cash inflow 1900 and 2000. These are real cash flow. Add 10% inflation. 1900 plus 10%. 2090. 2000 into 1.10 square. 2000 into 1.10 square, that is 2420. Expense is given 950 in first year plus 10%. 1045. Second year expense is 1000 into 1.10 square. 1210. Depreciation will be same 605. Calculate PBT. Inflow, outflow, depreciation. Check the answer. 450 is right. Second year 2420 1210 minus 605. Please confirm. Is 605 right? Is 605 right? 70% will be PBT into 70% will give you PAT. PAT is 70% of 440, 308. 70% of 605, 424, 424. CF80 will be PAT plus depreciation, 913. PAT plus depreciation, 1029. Now you compute discounting factor. Check the factor. 1 divided by 1.155. 1 divided by 1.155 equal to 0.8658, 0.7496. Now just multiply these two columns. Multiply these two columns. Write down PV of cash flow after tax 1561.82. Please check and tell me, is it right? Please confirm, is it right? Please respond. Somebody is asking you a question. Is the calculation right? Is the total of last column right? Is the total of last column correct? 1561.82. Yes. Now write down below NPV. Write down below NPV. NPV is equal to PV of cash inflow minus PV of cash outflow. PV of cash inflow 1561.82 minus outflow 1210. The first answer is 351.82. 351.82. 351.82 is your NPV. Advice, write down. Advice. Advice, write down. Project should be accepted. Project should be accepted as the NPV is positive. As the NPV is positive. Rakesh Bhatia, go to the next working note. Now we have to solve it by real cash flow technique. You are given nominal discount rate. You will have to convert into real discount rate. You have computed nominal cash flow. You have to convert into real cash flow. Real discount rate and real cash flow will be used. Is it right? So write down answer of second part. Under that write down next line step 1. Calculation of real discount rate. Calculation of real discount rate. Calculation of real discount rate. Then under that you write down formula. Real discount rate is equal to 1 plus nominal discount rate upon 1 plus inflation rate minus 1. 1 plus inflation rate, then minus 1. Nominal discount rate is 15.5%. 1 plus 0.155 divided by 1.10 minus 1 is equal to 0.05 or 5%. Is this right? Is this 5% right? Is the answer 5% right? Yes. Now the next task is to find out the NPV using real discount rate. First we'll draw one format. Very easy question, nothing to explain. Year, cash inflow, nominal, cash inflow, real, like we have done in the earlier problem. Discounting factor will be 5% and present value. Everybody please participate. Year column write 1 and 2. Cash inflow nominal go to previous working. This you will find in earlier calculation. Method 1 you will get it, 9131029. 913 divided by 1.10. Real cash flow 830. Year 2 1029 divided by 1.10 square. Please check the calculation. 850.41. Compute PV factor at 5%. 1 divided by 1.05, 0.9524, again equal to 0.9070. Multiply these two. Check the answer. Please check the answer. Are you getting 790.49? 850.41 into 0.9070. Check the answer. 771.32. So my total is 1581.81. 1581.81. 1561. Okay. 1561.81. This is the right answer. 1561.81. Then we'll go to below step number 3, NPV. NPV equal to PV of cash inflow minus PV of cash outflow. PV of cash inflow is 1561.81. 1561.81 minus 1210, and that is equal to 351.81. That is 351.81. What is the advice you will write? The project should be accepted. If you are asked a specific method, you can follow that method because NPV is positive. Because NPV is positive. I have solved this question by both ways. Very important question. Even if you are asked real cash flow technique, first you have to find CFAT in nominal terms because tax is to be computed. Very good. Now we'll go to question number 7 from November 2019 exam. November 2019 exam. Mark important. Sir, can we use real terms given in the question directly? No, you can't, because you have to compute tax. And if you have to compute tax, then the cash flows have to be converted into nominal cash flow first. Okay? We can't use real cash flows directly. Because we have to calculate tax. And tax is to be calculated using nominal PAT. PBT, tax is to be calculated using nominal PBT, because government will not accept tax based on real PBT, right? In case if you are interested, you can copy this note, otherwise not required. I'll go to next question. Important question because it is from your exam only, institute exam only. Mr. Swastik Enterprise wants to invest in a new project. The following information are available with regard to the new project. Initial outlay 80,000, annual revenue without inflation 60,000, annual cost excluding inflation, that is excluding depreciation and without inflation. So these are real. Useful life 4 years, salvage value 0, tax rate is given 50%, cost of capital is 12%, and there is a small problem. They have not mentioned whether this cost of capital is real or whether this cost of capital is nominal. Is it right? So we will assume nominal. We will assume nominal cash flow. That is the problem with the institute. They don't clarify, and then there can be a challenge to the student. Expected annual rate of inflation is given 10%. Determine NPV using cash flow with inflation. Purposefully they have written determine NPV using cash flow with inflation and decide whether the new project can be accepted or not. Your calculations are to be rounded off in 2 decimal PV factors at 12% is given. This is one more hint. When the PV factor is given at 12%, which means they are trying to give you a hint that this cost of capital is nominal, but they should have clarified it. Our student can be in trouble in the exam because of this. So please write the answer in the notebook. Please write the answer in notebook. When you will write, you will learn more. Please write the answer in notebook. I'll give you another question 8 as homework. Question 8, note down homework. Question 8, homework, same question. Similar question was asked in another exam. Step number 1, write. Step number 1, calculation of annual cash flow. Calculation of annual cash flow. It's a question of 4 years. Write down year 1, year 2, year 3, year 4. First point A, write. Annual revenue nominal. What is the inflation rate? 10%. Inflation rate is 10%. Revenue 60,000 without inflation. So take on your calculator 60,000 plus 10%. Plus 10%. Plus 10%. Plus 10%. Okay, understood? Okay. Now write down annual cost nominal. Annual cost nominal given 20,000 plus inflation 10%. 20,000 plus 10%. Plus 10% again. Plus 10%. Plus 10%. Then write down depreciation. Life is 4 year. Salvage value 0. Cost of the project is 80,000. So annual depreciation will be 20,000. Assume straight line method. Assume straight line method. PBT write down A minus B minus C. PBT A minus B minus C. First year, please reply. First year. First year PBT. First year PBT 24,000. Second year 28,400. Very good. Come on, third year. Third year 33,240. Fourth year 38,564, then tax at the rate 50%, tax at the rate 50% is 12,000, 14,200, 16,620, just take half of it, 19,282. You will get PAT. Suppose you don't have time in the exam, you can remove that tax column also. PAT will be same, no calculation, because tax rate is 50%. Question number 8 was homework, note down. And then write down CF80, PAT plus depreciation. PAT plus depreciation. Add these two. You will get 32,000, 34,200, 36,620, 39,282. This is my annual cash flow after tax. This is my annual CF80. Now we can compute NPV. Please write step 2. Calculation of NPV. NPV. Under that write 5 columns. First column write year, particulars, cash flow in rupees, PV factor which is given, PV of cash flow in rupees, identify year 0, cash outlay 80,000, present value 80,000, year 1, annual CF80 from step 1, in bracket step 1. Factor is given, check the factor in the problem, 0.893, multiply 28576 equal to memory plus year 2, annual cash inflow 34,200, factor is given, multiply equal to memory plus 27,257.40, then annual cash flow 36,620, multiply 26,073.44, year 4 annual cash flow 39,282, factor is given, multiply 24,944, 24,944, take the total of the last column. I am waiting for your total. Please reply. What is the total? One student has replied, your total is different from my total. 26850. 26850. Just check your total again. Just take your total again, please. Whose total is right? Your total is right or my total is right? 26850 is right. Is it positive or negative? Is it positive or negative? positive, write down the decision. Since NPV of the project is positive, we should accept the project. Since NPV is positive, we should accept the project. Assumption, write down. Assumption. Cost of capital. This is important, otherwise your answer can be different. Yes, Sajid Khan, you are right. 26850. Very good. Assumption, write down. Cost of capital is inclusive of inflation premium. Cost of capital is inclusive of inflation premium. Okay. Any query on this? This is question number 8, and you will find that your answer is, or your question is very similar. Determine NPV, initial outlay, annual revenue, annual cost, useful life. All figures are half of the previous question. Such a creative institute. Previous question divided by 2 is equal to new question. This time they have made it correct. Annual inflation including inflation premium is given 12%. This is the difference. Homework. Okay. Come to question number 9. One more question for the day. Question number 9. We will solve in the notebook. XYZ requires rupees 8 lakh for an unit. Useful life of the project is 4 years. Salvage value is nil. Depreciation is 2 lakh. Expected revenue and cost excluding depreciation and ignoring inflation. Excluding depreciation and ignoring inflation means these are real. These are real cash flow, and every year the amount is different. Cost is also different. Tax rate is 60%, cost of capital 10%, and this time they have written it carefully that this is including inflation premium. Just check the source of this question. I think it is study material of the institute, current study material. I think it is correct, current study material. After the class you can check. And this time the inflation rate is different in different years. Oh my God, you have to be very careful while calculating the revenue. For example, 6 lakh into 10% is okay, but when you go to second year, the inflation is 10% in the first year and 9% in the second year. So you have to multiply by 1.10 and 1.09 because the effect of inflation is cumulative. Year 1, year 2, year 3. When you go to third year, you have to multiply by this number 8 lakh into 1.10 into 1.09 into 1.08, and when you go to fourth year, you have to multiply by this number. Oh, so that is something new. That is important question. So I'll first compute inflation adjusted revenue. This time the question is different because inflation rate is different in different years. That is something unique. Are you ready? Please solve. Inflation adjusted revenue, 3 columns. 3 columns. First column year, second column revenue, third column revenue inflation adjusted in rupees. Revenue inflation adjusted in rupees. Are you there? First I will show you how to do it. Revenue 6 lakh. First year inflation is 10% on revenue into 1.10. 6 lakh 60,000. Second year 7 lakh, but the inflation is 10% in first year, 9% in second year. So you will multiply by 1.10 into 1.09. Effect of inflation is cumulative. 839,300. Okay, 8 lakh into 1.10 into 1.09 into 1.08. Please reply. 1035,936. Last year, again 8 lakh. 8 lakh into 1.10 into 1.09 into 1.08 into 1.07. Please confirm. The answer is 11,08,452. 11,08,452. 11,08,452. In the same way, we'll calculate for cost also. First year cost is 3 lakh in real terms. Inflation is, for cost it is 12%. For cost the inflation is 12%. Oh my god. Okay, so 12% you will add 3,36,000. Then in the second year the cost is, this column should be cost, the second column should be cost. Inflation is 10% in the second year, so you will take 4 lakh into 1.12 into 1.10, that comes to 492,800. Third year, again cost is 4 lakh, inflation is 9%, 4 lakh into 1.12 into 1.10 into 1.09. How much is that? 537,172. Again fourth year, cash flow is 4 lakh, but the inflation is 8% this time. So you will take 4 lakh into 1.12 into 1.10 into 1.09 into 1.08. This is my cost. Now the question is very easy. Revenue minus cost minus depreciation will give you PBT, you will get profit after tax, you will get CFAT, and you can discount it at the nominal discount rate given in the question. Below that, write down step number 3, point number 3, tax benefit on depreciation. Tax benefit on depreciation. Depreciation amount is given to you is 2 lakh. Depreciation amount is 2 lakh and tax rate is 60%. Tax rate is 60%. So annual tax saving due to depreciation will be 1,20,000. Step number 4, write down profit after tax and CFAT. PAT plus CFAT, PAT and CFAT, PAT and CFAT, PAT and CFAT. Under that write down year, then write down revenue, inflation adjusted, revenue, inflation adjusted. Then write down cost, inflation adjusted. Then write down PBT, PBT. This time, in order to save time and columns, I will add depreciation tax shield directly in second last column. That is also okay. PBT, PAT. PAT will be 40% of PBT because tax rate is 60%, 40%. And on PAT, I am going to add tax shield on depreciation. Tax shield on depreciation 1,20,000 will be added to the PAT figure to arrive at CFAT, and then I will compute the NPV in the last column. Ready? Write down first year 1, revenue, go to previous step 1 and step 2, 6,60,000, 3,36,000. PBT is 3,24,000. PAT will be 40%, 129,600, plus depreciation tax shield 1,20,000. So your CFAT would be 249,600 divided by 1.10, divide by 1.10, 226,886. This is year 1. Would you like to try year 2 yourself? Would you like to try year 2 yourself? Say yes or no. Yes or no. Year 2. Okay. So year 2, previous step 1, revenue, cost after inflation, PBT, PAT 40%, add 1,20,000 for depreciation tax shield, divide by 1.10 equal to 2 times. Use memory plus also, because I have to take total in the last line. Year 3, go to your previous step 1 and 2, copy from step 1 and 2, then PBT, calculate PBT difference into 40% plus 1,20,000 divide by 1.10, 3 times equal to, so that is 239,949. 239,949. Year 4, copy from step 1 and 2, PBT, come on, PBT, PAT into 40%, add 1,20,000, CFAT, divide by 1.10, 4 times equal to. Presentation has to be very good so that the reader can understand, the checker can understand, and he can give you full marks. Hence, you have to write all calculations. Please give me the total of the last column. I don't have the total of last column. Anybody here? Total of the last column. Just check, is it 9,06,738? Confirm 9,06,738. Is it right? 9,06,738. Is it right? Okay. Below that write down. NPV equal to 9,06,738 minus 8 lakh. So that is 1,06,738. 1,06,738. Is the NPV positive? Yes. Advice, write down. Advice. As the NPV is positive, the project should be accepted. As the NPV is positive, the project should be accepted. Same question, 10 number homework from your study material, question number 10, same to same question. Just read the question, you will understand. Okay. Any query now? No query? this wonderful answer is over. So we have conducted this lecture on YouTube today, and thank you for your response, for joining, and I am sure you must have got some benefit from this lecture. This was the easier part. Now tomorrow we'll take risk analysis and capital budgeting. Okay, so you must continue with this batch. Anytime you have doubt, you can ask me also. You can also ask your friends who are in final, or maybe I think CMA also have the same syllabus, they can also join. Right now we are running a scheme called, you can buy the book for 3500 AFM or FR, and you will get the video lecture fully free. The validity is for 5 years. So that's a very important scheme for the student, and they should take the maximum benefit of it. So even if you are appearing in next 2 year, 3 year down the line, you can take the lecture because we are giving a validity of 5 years. The lectures are currently getting recorded, so it is a recent lecture. It's not even fully recorded till now. More than 70% have got recorded. That will get on the Google Drive, and as and when we are going to record, you are going to get the lecture further also. So please share this video with